Hello everyone, welcome back to Forex Signals TV. I'm Shane Vernier, market analyst at Forex Signals and howtotrade.com. In this video, analyst Connor Woods and I are going to break down the 5-3-1 trading strategy. By the end credits, you will be equipped with the information you need to decide if this trading methodology is right for you. Now the 5-3-1 is a great way to streamline your approach to the Forex. It can help you become a true expert at select markets, optimize your time resources, and help you avoid psychological pitfalls such as analysis paralysis. So what is the 5-3-1 trading strategy? To execute the 5-3-1, one simply chooses 5 currency pairs to trade, 3 strategies to apply, and 1 time frame to trade every day. That's it. 5 pairs, 3 strategies, 1 time. The goal of this strategy is simple. Establish the best Forex trading plan for your particular style. Now that you know the basics, let's check in with Connor Woods for more on this robust system.
Thank you, Shane. So let's have a look at how we can actually implement and identify this 5-3-1 trading strategy. So I'm going to show you exactly how to do it using the way that I do it. And we're going to look at the components there. So that's the 5 part, the 3 and the 1. And we're going to identify them and then we're going to implement them. So first of all, this first part of the strategy, the 5 part. So this is the first point of call. This is the backbone of the organization in which this strategy occurs. So this is about picking and sticking with just 5 markets. How you actually decide these markets is completely up to you. You can decide this potentially on interest or one you have a passion about. You could go on success rate. So have you had previous success trading something and you just have like a generic good feeling about it as you load up that chart? Or it could be from where you live, for example. It could be that UK residents are picking a sterling pair, like it would be in my situation. So when we look at how we implement this 5 part of the trading strategy, we just want to pick 5 markets. So if we load up TradingView, we can basically create a red list of the 5 markets we want to pick. We can scroll through any of them and we can add them to our red list. So at the moment, what we've got in my examples, we've got the DXY, that's the dollar index. We've got US 10-year yields. We've got the NASDAQ, which is probably my favorite market. We've also got cable, which is sterling against the dollar. So I'm picking a sterling pair due to where I live and when I'll be actually able to action a trade. And I've also got the oil market in there as well. So that's the 5 markets that we pick. Moving on. The next part is this 3 part of the strategy. So this is essentially how we're going to utilize technical analysis. So we can break this into 3 components. First of all, we want to pick a trading style. For example, are we going to be scalpers? Are we going to be news traders, swing trading, price action trading, indicator-based trading, and so on? Me, I use price action. That's part 1 of the 3 component. Next, we want to choose the concepts that we're going to use. Bearing in mind we're on the number 3, let's pick with 3 concepts within that we're going to use. So I use price action trading, and within that, I'll use market imbalance, I'll use demand and supply zones, and I'll use liquidity grabs. Whatever style, you don't want to have too many and then get conflicting signals. So we just want to keep it nice and simple. Next, we want to choose a risk management plan, and that's the 3rd part of the 3 part of this strategy. So I have a risk management plan and a rule that I always follow. That is, as soon as I hit a 1-to-1 trade, so my risk reward ratio is 1-to-1, I always take half of the trade off and move my stop loss to entry. This way, no matter what, I've won, I've beat the markets in this trade, and I'm running risk-free. Just give it a go, see what you think. When we look at actually the charts now, you can see, for example, I'm on the NASDAQ, my favorite market. I've got my liquidity marked. I've got my imbalance. I've got my supply zone. It's a clean chart. I've got the key lows marked. It's the 3 concepts that I've got. I've got the price action trading. I've got the 3 elements of that on there. And if I was, for example, going to be entering a trade, for example, let's say that I was long here with a stop loss just below this low, and I was targeting the liquidity up here, just for argument's sake. At the stage where I would have hit, the market would have traded at 11.95. I would have essentially just moved that stop loss to the entry level, and then I would have been trading risk-free, and at the same time I would have taken half off. And then you can just let the trade run to wherever you want it to, wherever your longer-term target is. The final part of this 5-3-1 strategy is the 1 part, and this is about when you trade. So One of the biggest benefits of the financial markets is that, it has 24/7 availability in some cases, especially the crypto market. The time which you pick to trade should be when the currency pairs or whatever market you've chosen to trade are at their most active. For example, within my 531 strategy, within those five assets classes that I've picked, I've chosen to pick US indices within that, which are always, at the most active when the US session begins. Over in the UK, that for me is at 2:30 p.m. currently. So that's when I want to trade the Nasdaq. Here is a breakdown really from Investopedia on how we can break down those sessions, those time zones. So we can see the London Open at around 8 o'clock till 4. The New York Open, if you're trading US currency pairs, 1 o'clock is a good time to trade that. That's when it's most active. And if you're trading any Aussie pairs or over in the Tokyo session, we've got Aussie opening up, Sydney opening up at 10 o'clock, and then we've got midnight for the Asian session. So there we have it. Now you have an organized 5-3-1 trading strategy, which you can now perfect with little confusion about what to do and when to do it. Back over to you, Shane.
Thanks, Connor. Now, like all strategies, the 5-3-1 has a collection of unique pros and cons. First, the pros. The strategy offers the trader a great way to get organized quickly, and it also gives them a strategic framework to trade from. Because of these benefits, the 5-3-1 is considered ideal for new traders in the market. On the other hand, the 5-3-1 traders are subject to a few drawbacks. When using this strategy, trading opportunities are limited as both the number of markets and trading time are reduced. Also, there isn't a high degree of flexibility as the trader is focused on applying only 3 strategies to the live market. These concerns prompt many veteran traders to forego the 5-3-1 in favor of broader approaches to the market. Ultimately, the choice is yours whether the 5-3-1 is right for you. Once again, we'd like to thank you for joining us for a look at the 5-3-1 strategy. And be sure to keep a close eye out for our Forex Signals TV live events. U.S. non-farm payrolls, CPI, as well as the Fed, BOE, and ECB rate hikes are a few things that we cover live. So until next time, trade the action well, and we'll see you on our next live stream.